Hello, I'm Dr. J, and this is the Volatility Sonar Report. The reason it's so important for you is this is like a heartbeat for the market, folks. It tells you whether or not we expect the market to go up higher dramatically or down lower dramatically. As VIX moves up, they're expecting dramatic moves. As VIX moves down, that means volatility is going to be more stable. The markets are going to be more stable. Here's today's report.
Welcome, this is your Option Monster Volatility Sonar Report. From the floor of the CBOE, this is Jamie Tyrrell of Group 1 Trading. Well, we've seen a small rally today, the S&P up about 5 points. Contrast that with yesterday's 25-point sell-off. And the very interesting thing is, after this two-day period, the VIX is emerging unchanged. We were in the low 32s before Wednesday's sell-off, down 25. Up 5 today, and we're back into the low 32s. So what we're seeing is, even though the market is moving down this week, the VIX isn't moving up any. It's similar to what we saw end of February, early March, where we were down 1 or 2% every day as we hit the bottom of the market in early March. But the VIX really didn't appreciate it. It's because the market wasn't moving at a level that surprised the current volatility level. It wasn't changing volatility assumptions. Even though we were leaking down, panic wasn't setting in. And so that's what we've seen this week, is even with a small sell-off over the 2 days previous to this, we're not seeing any real pop in the VIX that's sustained. So the big trades we've seen today are one in June, one in May. The June trade was the biggest trade. It was the June 37.5 55 1x5 call spread. The customer here sold the 37.5 for 190 to buy 5 55s for 25 cents. So the total trade traded 65 cents, with the customer selling the at-the-money call, buying 5 of those upside calls. This could be a skew play, with the customer trying to capture those 55 calls that have kind of gotten beaten down. Could be a vol play with them going after that 37.5. There's a number of different ways they could be going with this trade. But it's interesting that the 55s have continued to trade. As the futures leak down, they're trading 20 cents now. The other trade we had was the May 42 half calls. We are approaching expiration with the front-month future right around 32 half. And as you do that, every day another strike really comes off the table, and there aren't really bidders for that strike anymore because there's less and less time for the VIX to make a big move. Today, it really happened with the May 42 half line. A lot of people in the crowd wanted to close positions, get some upside protection, and they bid 3 cents for those May 42 halves. A customer came in, said, just give me your numbers, whatever numbers you want, I will sell those for 3 cents. They traded 20,000 times, and the customer here really saying either they're long them and they want to get what they can for them, or just no fear of it going over 42.5. So that was the trade there, 3 cents, 20,000 times. Our May 32 half straddle, that's the at the money, that's trading about 250 right now. So people are torn between those who think that the VIX will settle outside of 30 and 35, and those who think it'll settle inside. That's where it's trading, 2.5 right here. This is Jamie Tyrrell, Option Monster. After today, 3 days until May expiration.